The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. This is the fourth hour. This is the 11 o'clock hour. We start here at fourth hour. 1, 2, 3. It's the third hour. 1, 2, 3, fourth hour. Correct. So at 8 o'clock, we have John Logan. And then for 2 hours, we have Steve Rose. I come on 11. Straight after me today, we have Larry Pesavento. Then we've got Daryl Martin, Dave White. We've got Tom O'Brien, 2 hours from 3 o'clock to 5 o'clock, and then Andy Hecht. What a full day of information you've got here at TFNN.com. So it's my pleasure to be here Monday through Friday on market days, and most importantly, it's a pleasure to get those emails and those questions from subscribers and TFNN listeners all the time. It just keeps us on our feet to be able to answer questions. It actually helps, at least for me, it helps me think about areas that I might not be spending time on or I might not even know about. It's fascinating. So let's just go right into the numbers. The Dow is up 37 at 17,521. Remember, what we're looking for, what I am looking for in the Chapman Wave methodology is to get to at least a peak D in the Dow, and that's at the point where we start to concentrate on the technicals and to see whether or not there will be a turnaround that in essence gives you some sense of whether you want to short, some sense of whether you want to remain in this position, because things can change. You could, in fact, get a turnaround in the market at that point, but you could also get an extension. What does that mean? It means that there's a certain moment where the Dow, the S&P, the Qs, etc., pull back, but then make new highs. And that's where you assess. So the Chapman Wave is the methodology that takes you from a low bar to a buy signal that gets upgraded if everything conforms. It gets upgraded to a buy mode. That buy mode could then turn out to take you to at least a peak D. I always say at least a D because at D, that's where your homework starts. That's where new information is put in. That's where old information is either taken out or becomes even more important. That's where we've rolled over into the next contract, the next time frame. So if you're looking at a 120-minute chart I've got right now, the E-mini 120-minute chart, which has gone to a leg E and then a peak E, right, and forming a beautiful channel, an up channel, holding the 9-period exponential moving average as the S&P December E-mini at 2020. And we're looking back using 2020 vision. You'll see that the low of 1813 on the 15th of October turned around in such a way that leg E was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 sessions before you got a peak, and then a minor peak, and you've just gone to a leg B. I'm suspecting that from here on, you use up time to the upside, less price. This is what I'm thinking. MACD looks fantastic, but it is stretched. The stochastic is amazing at 95%. They could go higher. We don't even have to think about that. Why? Because we're long. In my opening call, we have only long positions. The one short position that I wanted to put on, I missed putting on because I wanted to pop up first, and it is Baidu. Why? Because, we have wonderful listeners, wonderful subscribers. I had an email last night saying, hey, have a look at Baidu. It made a round number high, and I checked, and there it is, leg E, 246 round number high, and I gave advice. I normally would not immediately the next day use any information that I got from anyone without giving it a good few days to check it out. In this case, I checked it out, and I said, if it rallied to such and such a level, we would go short a half a position, but we would put a stop in 1 penny above the round number high. Why? Because if it takes it out, yes, it could still turn around after that, but it means now you've got open, you haven't got an icon. in this case, a round number icon to hang your hat on to say, that's my benchmark. A break above it says it could go even higher. So that's it. But this pattern here, this cup formation, the Chapman Wave dreaded Chapman Wave drop bucket pattern, double top pattern, is really what we're watching very closely. And to top it off, what we've got is a failing. The technicals were failing. Look at the deflection in the MACD down. So Baidu BIDU down $1.30 was down quite a bit more. Hit the 200 period moving average right at 233.39. What was the low today? 233 round number low. Oh, a round number high and a round number low. So we're going to watch Baidu. And what I said to subscribers, it's been great. It had a good response to its earnings. I'm just basing this on my criteria of round numbers, peak E possible, and that the MACD would start to flatten out and pull back. So we have got no position there. All our positions are on the long side. And so far, thank goodness it hasn't been the wrong side. We'll see what happens. I mean, I don't know what to tell you other than that. So let's go to the numbers quickly. The Dow is up 25 at 17,510. S&P is unch at 2,023.55. The comp index is up 45 cents. They're at 46.21. You've got, now this is going to be very interesting. You've got gold attempting, it's just now unchanged. It's attempting its first kind of a rally. But look at this. So let me just do that while we're here, and then we'll go to our callers. Let's go to the @GC. This is the continuous contract. Yeah, it looks like it's trying to at least stabilize here. But the 120-minute chart says, hey, you know the pattern that you've been looking at, and gold has been replicating this pattern over and over. So there's no reason, it's a fractal. There's no reason why we should not think that it's going to do the same thing in the same pattern. That lowercase h goes to a lowercase m, just like a little two arches, and just bounces around there. Unless gold spikes into the 1155 area, it's at 1145.90. Hey, it should be just like nothing on earth to be able to just pop that much in gold. It's been very difficult. That would change it a little bit. But in the meantime, back at the ranch, the dollar has continued higher to leg E. Let's see, this is A, B, C, D, E, and it's pulled back. This is A, B/F. All right, so the dollar 120-minute chart is acting very well, but if the dollar breaks at 87.76, if the continuous contract takes out 87.30 and slides and then goes below 87.20 to 87, if the dollar breaks 87 by tomorrow, gold will have a pretty nice bounce. So if anyone's thinking of just nibbling on some gold stocks here, your risk reward is that you know the downside is just a black hole, but the upside is on a percentage basis. If it holds, you get a nice percentage pop. I would just consider it a pop-up at this particular point. And you got crude oil, CL, is down $1 at 77.5. Bonds are at this point down 10-30 seconds at 140 and 25-30 seconds. And I think we've covered a chunk of things. I want to go to Kevin in Palm Harbor, Florida. Kevin, how are you?
Very good, Basil. Pleasure to speak with you.
Pleasure to speak with you. You'd like to look at?
Well, I was looking at the gold spot price, and it sounds like you just covered it. So I was just looking for a near-term direction, and I think you answered that very well.
Well, you know, let me just do this because the gold contract itself is acting a little differently to some of the let me just put GCZ 14 here. I'm going to go to a shorter-term chart. This is the 120-minute chart. Yeah. You see, when the stochastic and the MACD rally very sharply, now, for those of you looking, folks, I'm going to put this right in the middle here. This is an interesting chart, and what I've got in it is this goldy brown line of goldy brown. Let's call it something else. Greeny brown line right there with the little bands above and below. That's something that I had someone work on for me. It's a 200-period exponential moving average. I'm going to fill up the whole page. Let me see how that fits. Yeah, that's beautiful. Fill up the whole page, and you will see that gold, this is now the gold. This is the December gold contract. Probably should move to another contract, but in the meantime, this will serve our purpose. Had made the 200-period exponential moving average tremendous resistance. It is far, far away from it right now. There should have been, with the move up in the MACD and the slow stochastic, a comparable move up both times in gold. And since the beginning of November, every rally has just been modest and has then failed and gone to a lower low. The big test here is, does gold have the strength to go to the 1162 area, the 200-period exponential moving average, just to get close and to kiss it, to say, hi, I'm still around, remember me, and then come back down. And after that, if the dollar, now let me just do the dollar, DXY, see, the dollar's doing the exact opposite, and yet at the same time, the way I'm reading it, 87.09 is the 200-period exponential moving average support in this 200-period exponential moving average, and it looks to me as if the dollar is getting closer and closer to testing it. It's a rising trend line, and dollar's been making higher highs and higher lows in this 30-minute chart. But if gold starts to move a little bit higher, it'll probably be because, let me put the euro now, EUR, USD. Yeah, not good, really not good. All right, I'm just going to grab one of the gold stocks. Let me grab another one, ASA. It's the one I like. If ever there was an opportunity just for a certain percentage bounce, and I don't think the percentage is going to be all that great, I would probably say to you, this is the area to maybe do a tiny, let me put it this way. If you're doing other things and you're not bored, I wouldn't be bothering with this. If you are so intently watching all the different indices, but gold in particular, and you think, aha, my fingers are itchy, you know, I've stopped doing that when I like to trade the E-minis, the S&P E-minis, but when I find that all I'm doing is trying to relieve my itchy fingers, I just move away. I close everything down that pertains to that particular instrument, and I say, no way. If you don't have if your charts aren't giving you an opinion to trade, don't try to force the trade. So all I'm going to say to you is, I would have said to you, you could nibble here. There's a chance that the dollar in leg D has a sudden pullback. I got a feeling, based on some other aspects, that it's going to be a little later on, that it's probably next week, that gold has a sudden pop to the upside, that our markets start to have a slide. I'm just thinking slide at this point. I'm not thinking a major turn. And maybe because gold has divorced itself from, it used to be where the E-minis, bonds, and gold actually went up together at some point, and then that changed completely. So I'm thinking that I'm going to make the suggestion, don't get carried away. I would not do anything unless you see the dollar start to dip. Then you can nibble on some gold, and that should give you a nice percentage. Raise your stop. Other than that, Kevin, no, I'm going to ask you if you can hold on a second through the break. I'd like you to look at silver as well. Can you do that?
Sure, I can.
Okay, we'll look at it together. I'll be right back, folks. The Dow is up 40.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour, and just tons and tons of questions. Let me just deal with this right now. So, Kevin, what I'm looking at, I've got ASA Monthly. This is the ASA Gold and Precious Metals. Used to be, these are South African gold companies made up. It's almost like a trust, and I think they moved from South Africa to England, and now I think they're registered in Bermuda. I shouldn't say now. For a long time, I believe they're registered in Bermuda. I think it's Bermuda. Anyway, I've just used this always as a very nice benchmark for myself. I don't trade it or anything like that. I just like to pick it up to look at it. Well, it's made a full 100% return from the 10.34 low back in 2008. ASA is ASA Gold and Precious Metals Limited, trading at 10.19 right now, 15 cents, and gone to 36.13 peak E in the Chapman wave, just like it went to peak E in the Chapman wave monthly chart back in March of 2008 from the 200-period exponential moving average, that goldy brown line. Oh, I love gold, gold for gold. This is a 200-period moving average, and it went to 36.13. And that was right at the end of 2010, and then it came down and went to 11.39 in December. That's about a year, almost a year ago. And then it spent an entire year making an arch formation with a lousy H pattern. It's really the M, lowercase m, with a slightly larger second M, making them an H with a second arch that makes the second part of the M pattern. And now it's gone to where? It's gone to a low of $9.91. So it's broken on a monthly basis, the low of 10.34 from way back in 2008, 5 years ago. And this is the month that's really important because in the larger arch context, when you test the left side low bar, the most important low bar, it means this is the month where if it goes underneath, how it closes is going to tell you what the rallying capability is. So we can't deal with that right now because we've got the entire month to go. But I can look at the weekly chart and say, hey, the weekly chart, let me just move that away right there. The weekly chart is a very ugly pattern. The stochastic is attempting right now to make a soft W formation, and the candle that's forming, if by Friday it can close instead of towards the 980 area, it can close towards the 1050 or higher area, that'll say, hey, first reasonably decent candle in a long time since the last retest of at 15.36 in July of 14. And right now, it's got a slightly by one penny, it's got a higher low bar than yesterday. So that's starting to move. The 120-minute chart is saying, I'm ready to move, but I can't say yet how much I'm going to move higher because there's a nice positive divergence between the candles and the technicals. But if I don't produce price movement going towards 1164, the 200-period moving average, even the gap low of the 30th of October at 1085, if I can't get anywhere close to the 1050s in the next couple of days, this is just a lousy pattern. If I put that together with gold and the USD JPY, that is the US dollar Japanese yen currency pair, which is also in leg D with a potential doji and a very strong MACD, very strong stochastic, all I can say is I think that we are ready for a little bit of a bounce in the gold stocks, but it's only a little bit of a bounce until I see weak technicals form in both the dollar and the USD JPY, which have both paralleled one another. The weekly chart is amazing in both cases. Leg D, but very, very strong. I would only treat it as a very quick position. So I don't know if you want to do that, but if you do, then I'm going to suggest to you that if you get in right now at 11:45, if you give it, I don't know, how much stop would you normally give to a position like this? Kevin? Oops. I think Kevin might have just cut out right there. Okay, so Kevin, if you're prepared to give it, I don't know what, I don't trade it, so I'm not sure what how the price movement is, but if you give it like a 3 to 4 point stop, it shouldn't at this point pull back 3 to 4 points. It actually should be moving higher. I would just nibble on the gold right now, and if it takes out the high of 11, it's at 1145.80. If it takes out 1150, I would add a little bit extra, and that's my trading position, and I'll make sure that the one position takes no loss. It only takes the gain, the core position, and the trading position is the one that has to climb above 1152.50. If it does that, you're in a nice position. I wouldn't hang on. I wouldn't marry it. It would just be a shorter-term position. So here's the other thing. I don't know, Kevin, if you're there, just yell, I'm here, but I'm not sure if I heard you. You're not there. Okay. So what we're looking at now is gold could have a little bit of pop. I think the bigger pop will come when I start to see gold pull back, and that's the dollar pull back. Hey, folks, thanks for this section. Thanks very much for calling, Kevin. And I'll be back. Dow's up 45, S&P's up almost 3. Be right back. The fix in some other areas.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So Berkshire Hathaway is up 30 cents. It is just slowly, relentlessly going to new highs. And the way I'm counting it now, this is the G/C in the monthly, but it's still very positive. And I have to say, I got a bunch of questions here. Actually, this is Julie has often sent me an email just before the last break of the show, and they were good questions, and I can never get to all of them. Actually, a bunch of people do that. I'm going to ask you to send them a little earlier so that I can actually start looking at them, so I can plan the whole show a little differently. So Julie asks, this is a really good question. The dollar. Strong dollar has kept the EEM. Let's go to the EEM right now. EEM. That is the Emerging Markets Index. This is peak A, B. Remember, what's the objective in the Chapman wave? To get you to, can anyone just, in the meantime, list a couple of stocks that got really hammered over the last couple of days? Qualcomm was one. I want to show you something fascinating. Look. This is the dollar. This is the EEM, the Emerging Market Index. Goes to where? Leg D, doji high, reverses and comes down sharply. Goes to 42.33 on the, let's see, that's the 31st of October. Plop, 1, 2, 3, 4 days, it comes down. It's at 41.13 right now. Peak G in the weekly chart, and this monthly chart, unlike the USD JPY, which sliced through that resistance, the EEM cannot get through the monthly downtrend Chapman wave inside track resistance zone. So that's very interesting. Oops, let me go back to the questions. So Judy says, and CL, that's crude oil, CL. There are CL acting really poorly. Gone to a leg E. This is the week, in fact, that it's supposed to make. No, it's 1 week late. Make a low test of, I've got to squeeze this close, squeeze. So it goes to peak D, fails, goes to peak E, fails. In the weekly, goes to peak E again, fails. And now it's made a very large H to M pattern, and it's about to test the low. This is a continuous contract. The low in oil that was made on the 29th of June. I've got it at 74.06. That's a smoothed out number. So don't go by the number. Just go by the price action. And look, the low that so far that we've made is at 75.84. So we've got 74.06, 74. So we've got less than 2 points to go before it retests. We'll see if it's going to retest. So, yep, crude oil and gold in bear markets. But the Dow is at highs, and will the Dow fall? I'm going to answer that right now. I thought strong dollar is a big negative. Remember, it used to be, there was a time where a strong dollar said, uh-oh, stock market going down. We've got no relationship right now because the dollar is, in fact, like the Fed, like bonds, like, now this is interesting because we got Abe in Japan. Oh, I got a really nice article last night. Very interesting for me because it had fundamentals that I don't necessarily look at. I piece them together in different ways. And you've got Abe saying that we're going to use our money to buy not only our stocks but foreign stocks. So the question here is a great question. So the Dow 30 global companies or the S&P 100 big companies, how the dollar going to impact them? Then the question goes on, is it possible Fed is using their services to buy stock market and be on the bid? Well, we know that in a certain sense that's been happening. So the answer is yes. Our stock market crash is not going to happen anymore because the Fed or United States government with their giant dollar buying power just buys anonymously, is shorting the market, just a losing game. Well, it wouldn't be. Look at Baidu would have been a nice short. In fact, the person who sent me the email last night said he went short because of the round number, and he's looking great right now. If he gets taken out, he gets taken out because it bounces stronger. But that's a nice way of doing it. So individual stocks have got slammed. Now let's just look at this. Sorry, I haven't finished the question. So I'm going to answer you by saying absolutely not. There's no way on earth that the Fed can bypass human nature. They can extend durations, but they cannot change human nature. They can't do it. I don't believe that anybody can do it, not at least for this week or next week. This is something that's going to evolve over time, and it still won't change. You'll still have human emotion going to extremes of depression, sparsity, I call it, and excessivity on the other side. So we will get hedge funds, she says, maybe over 90% are underperforming. The S&P and the Dow are underperforming the Dow, and they did for 2013, and I believe they're doing the same thing here. Shouldn't there be a domino effect from oil and gold investors, redemptions? You know, wonderful questions. I'll try to answer them as we go along. Just remind me if I skip one over the period of the week. They don't have to all be answered right now, but I'm going to answer it real simply this way. Crude oil is like a huge tax cut. And I suspect that that's one piece of fuel, excuse me, that's going to help the stock market stabilize any pullbacks as long as gold remains fairly low. I also think, let me just double check here. I also think that Tesla, which is now up 12.15, so I was wrong about it going down, is going to be considered a battery company at some point because if crude oil keeps coming down, then getting the hot BMW that challenges at 0 to 4 seconds in whatever it is will be a competitor. Because, I mean, let's face it, if crude oil comes down, people who are buying that kind of car are not going to worry too much about gas. It's the sexiness of Tesla that is the appeal. So it's a separate thing. So, yep, it's up 12 right now, 243.47, certainly gone higher than I thought on a bounce. So let's not move there. Now, Qualcomm. Look at this. Qualcomm went to peak. I love this. That's not the one. Oh, no. In the monthly chart, Qualcomm was a peak E. In the weekly chart, it made a peak D, and then it did this thing I call the rogue wave. Spikes up to a nominal new high, holds it just long enough to get the bulls who got out back in, to have all the bears covered, because if it's at all-time highs, you better get out. And then the very bar that takes you out is the bar that plunges, and then goes even lower. So that's very interesting. So Qualcomm's down 8.71 at 68.49. I know these things so well. I look at them all the time, and you think I can even off the top of my head think of one stock that it made. Oh, and let me just look at this. HLF, maybe that was one. Yep, HLF. There's your Chapman wave. The lowest low bar in Herbalife, 38.63 on the 22nd of September. It goes peak A, peak B, peak C, peak D. Remember, this is not A to B equals C to D. It's got nothing to do with that whatsoever. It actually turns out that it does have something to do with it in a different way, but that's not the concept. The concept is simply I label higher peaks, peak A, B, C, D, E, F, and G, and on the way down it's lowercase a, B, C, D, E, F, G, and at D is where things can happen, and they're almost always, that's the number. So there, the fourth highest peak, peak D, it goes right, misses the 200, it touches the 200 period moving average, misses the 200 period SMN, the simple moving average, and what does it do at 56.74? Has a round number low of 53, a hint that something's going to happen. Plop the next day, bad news. And where's it trading now? It's trading down at 40.30. That's peak D. Now there was another one. Trying to think. HLF, was it? I never follow this cause. Yep, Cause. Cause is Michael Kors went to a peak F in the monthly, peak. Can't remember now. Oh, I haven't finished that one. And the daily went to a D with a doji high from the low bar that was established on the 15th of October, 68.55. ABCD, plop. Doji high, 79.70, and it goes whoops from the 79 area down to the low the other day of round number 70. Now trying to have a bounce. There was another one. Was it Priceline? Priceline. Low bar, 1017.28 on the 13th of October. It runs peak A, peak B, peak C. It goes to what? Peak D at 1229 round number. I forgot to put that in. 1229 round number high. And then what does it do? Kaplop. It's now trading at 1096. That's 200 points down. That is huge for... Priceline hardly ever does that sort of thing. Look at that. It's just been doing it lately over the last couple of months. Priceline's having a problem, that's for sure. All right, so I covered those. Now, I wanted to talk about, here's the other question. It keeps coming back. A number of people keep asking me. Yeah, well, first of all, you've said that V-shaped intraday rally, S&P shows buying upside targets. What are they, S&P? I'll give it to you right now. And as I'm doing that, I'm just going to look at the email I had here from CME, and that was about the VIX and the IWM. So let me show you this. The VIX index, VIX.X, is trading down under the 9-period moving average of 15.06. It's just giving you no sign whatsoever of buying pressure. It's giving you a lot of signs of selling pressure, and that looks like it's going to continue. So the VIX. Now, the question, that's right. The question was, I'd mentioned that 17 was very important. Well, it plunged through the 17 area and went to the 15s and then the 14s. And now it's at 14.32, having touched 1372 on the 31st of October. So VIX, until the VIX starts to rally, and I'm going to put it this way, the VIX has to get above 16.70. It really has to be trading at the 17.20 area or higher, or higher, not Ohio. And as soon as it does that, my suspicion is we will start to see signs of a real test of internal strength in the Dow. So now I've covered the VIX, and I've said the weekly chart made a peak C. Doesn't always have to go to a B because it's an emotional response to the market. If it does, it's very nice. Gives you a sell mode of more time, which it did right there, 2191, the week of the 28th of June of last year, and then it plunged. And then it never made the 21.91 until it spiked 3 weeks ago. Whoops, right through to 31.06. Now I think we've got a little timeout. Now let me do this. The S&P. So the answer is that the VIX at this particular point is not showing anything but weakness. Therefore, it's showing selling pressure, not buying pressure. I think that's going to change soon, but it might only change as an intermediate term, not intermediate, as a shorter term reversal in the markets. Now, the S&P will use the SPX.X. Look at this. Leg C, nice leg C today. Now, I should mention also, just disclosure, in my opening call, in the long positions, the S&P, we are long the S&P via one of the very highly leveraged long S&P ETFs. So it's trading right now 2027. What would be my target? Now, it's very interesting because I usually don't talk about targets because I like to look at the waveform as saying it's a forward-looking projection. It looks at sometimes time, but it really looks at higher highs to come. And it doesn't tell you what the lows are to come. It just says there should be higher highs and higher lows. And at some point, you can make a lower low than a previous leg down from a peak. But unless that's peak A, it doesn't matter because the objective is to get you to that fourth highest peak. So let me do this now. There is a trend line in the weekly chart that I made a big deal about the other day. And that trend line says that the area of resistance is right on that red line. This week, it's at 20.44. Wow. Next week is at 20.50 and a little bit higher, but that's not the issue. The issue is that when I can use techniques that jump out and say to me, hey, look at me, woohoo, woohoo. I'm a technique that you might want to use. I use it. So there's a technique that I developed, a long time ago when I developed the falling axe formation. That's just a declining, expanding cone. When you break out above it in a certain particular pattern, a pattern that we usually look at in great detail when I do my Master Trader series, and I've done it in webinars if you want to check them out at TFNN. There is a move that takes you from the low to the breakout point of the declining resistance line, in this case that pink dashed line, and the pullback usually has a V-shaped bottom somewhere. This one didn't at all. Do you know that out of 15, I think it's 15 sessions, whatever it is, 14, 15, 16 sessions from the low of October the 15th, there has just been one ugly black candle. Look at that one ugly candle right there. Actually, I prefer when I'm using green and red like I do here because it just, the clarification is so visual. Look. Right there, you see that little red candle, that little candle over there? And this is another one, tiny little doji candle, little negative close, and then another one yesterday. Couldn't hold it 2 days ago. This is so bullish. But as I say, I don't know yet how the upside is. I don't see an upside move in this leg from the bottom to that doji and then up again, but I do see, and let me go back to my, that's the S&P chart. Let me go back to my Dow Daily that I show my subscribers every day. Every day we know exactly what we're looking for. We know what to use. We know how to use the I give in this particular section. I wonder if I can do that. Give me a chance. Let me just do this. No, wrong, not that. We're going to go to this one right here. Yes. Okay, I will find it. I just wanted to show you what I show my subscribers every day. In fact, I'll just as we're going out, there it is. That's my overview section. This is my Dow Daily. There's the Dow Daily. Oh, that's not the daily. There is the daily. Oops. That's the daily. And I do a whole bunch of information that I show you, plus what's before. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Okay, 7:30. Okay, hold on. Hi, folks, we're back. So, I had a couple of questions. Of course, I've completely lost my train of thought there. But the real question that I had from CME was about the V-shaped pattern that I call the Groucho Marx eyebrows pattern. So let me just deal with that in combination with the question that I had in the den about the IYR. And that's the iShares of the Dow Jones U.S. Retail Index, or REITs Index, and it's real estate index and REITs, and it's a trust, and it's at 76.21 was the all-time high at that was May of 2013. Drops down to 60.92 and starts a slow move to the upside that is now in leg B/E/B, and it's gone to a fractionally It's gone to 76 round number high, to a fractional miss of the previous high, but most importantly in the weekly chart, and that's what I want to talk to right now. In the weekly chart, what we've got is, oh, that's right, it was the Dow I was looking at. So there's the V-shaped pattern, and this close looks like this week should be above, quite nicely above, the 74.94 last high. Now, that doesn't make the eyebrows. You can't, unless it's winking. I can do that. I do that with my grandchildren. I raise the one eyebrow and then the other, then the other. But at the same time, that's not what you're looking at as chart formations. So this doesn't quite fit that format. Not to say it couldn't fail, but it's gone a little higher. It shows tremendous strength in the weekly chart. The technicals are kind of confirming to a certain extent, but not fully. So you don't get the sell signal just based on the weekly. You have to get it from the daily, and the daily is in F/B. Now, everything about this has the connotation that it should go to a G and fail. So I'm going to be watching this real closely. There's no signal yet in the IYR to say that there's a sell signal coming up. There's just hints that there should be another high, and then we've got to be very careful. That's number one. Now, when I go back to the Dow, I want you to just talk about extensions, talk about Fibonacci extension. What happened here? Oh, there it is. Look at this. There's the pattern I call a one-to-one expansion from the falling axe formation, the declining cone formation. And I don't usually take it from the trend line. It's usually from a V at the bottom of the left side that I can take it from one step at a time. And now I've used the 9-period moving average because there isn't a trough. But at this particular point, I have to use the actual trend line. And that trend line says that there should be a test. It says only should. It's just a technical thing. It doesn't say it's got to do it. Of 17,590 in the Dow to 17,620. We're 100 points off from that high. That's in leg C. But the Fibonacci extension I took from the bottom at 15,855 to the first peak at 16,427 down to the next candle low, the doji low. And that takes me exactly to a 2.38 expansion, 238% expansion to 17,641 in the Fibonacci expansion. I usually do this. I put it there, and then in my mind I lock it in, and then I take it off, only for one reason. I like clean charts, and this one just is not giving me a clean chart. There's just too much information here, so I don't know why it didn't come off, but it should have. So that's the way I look at these particular patterns, and there it's gone. So in looking at all this, this is one negative candle. This is very positive. So I don't want to fight that trend. So all our positions are long. We miss the one short, it's not a big deal. So I'll be following this up. I'll be speaking to Tom later this afternoon. And at the same time, please stay tuned for Larry Pesavento. I'm just dying to hear what he's saying on gold. See if gold is going to have a little bit of a balance here and other factors. So stay tuned, folks. Fabulous programming coming up. And check my opening call. This is just a great time to get it, especially if you have a large portfolio you want to check. I'll be right back tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.